Good morning, everybody. This is the professor with Day Trading for Success. Do pro traders trade on insider information? That's the question today. I'm going to let you guys answer it with the evidence that I'm going to present to you right now. So could that be the difference? Could it be? So why don't we go over it today and see if you think pro traders are getting inside information, and that's the main reason they're making so much money and you're not. So we're going to cover a lot today. That's going to be one of the main focuses, but we're also going to talk about you starting from the beginning and what you should look at to develop your first strategy when trading, because this channel is dedicated to try to make you enough money to make a living, maybe $100 a day, $200 a day, maybe up to $500 a day or more, depending on your skill level and the time that you put in to learning how to trade. And we're going to try to cover all the different ways to do that and all different strategies that we trade here, so that maybe that can help you in your journey for that purpose. So stick around. We're going to get right into all that stuff.
Welcome to Day Trading for Success, hosted by the professor, a professional trader, former math teacher, now focused on engineering advanced systems for trading firms with algorithmic modeling and AI-powered tools, using forward-looking strategies and indicators designed to uncover high-probability opportunities. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, welcome back, everybody. I have this layout here in front of you to show you where I hope you might end up one day as a professional trader. This is a layout that's used by professional prop firms. A prop firm is where you can get funded to trade with their money, and they take a percentage of that money, and then you get to keep the rest of the profit depending on which prop firm you're working with. And one of the things that prop firms offer is their special tools. So if you were working with a prop firm, you might have a layout something like this that has all their special tools. So I'll have a link to the video that shows you how all this works, but we're not gonna go into deep into this layout here on this video. I just wanted to make sure you saw where you have the possibility of ending up one day where you could make some big money if you get to that point. Can anybody tell me what all these movies are about? Each and every one of them is about something. And I'll give a spoiler alert, and I'll just tell you that it's about insider trading. It's about an advantage, like in these movies, either the director, the producer, the actors are showing you time travel. So you go back in time and you know what the stock's going to do, so you can bid on a stock, buy a stock, predict the future, and become a millionaire. Or they're getting inside information just in current time and beating the stock that way, which is the same thing. It's like they're getting information, knowing which way the stock's going to go based on some sort of inside information. So you've got time travel, or you might have a super ability like in Limitless. I love that movie where he basically is he's so smart that he can just see which way the market's going to go. So what if you had one of those abilities? What if you could time travel and just know what to do and become a multi-billionaire? It would solve a lot of your problems, right? Or if you had some super ability, right? It's fun to contemplate sometimes, like a do-over, whatever, and be all the wealth of your wildest dreams. And if you said you've never contemplated that, you'd probably be lying, because I think most of us do contemplate that at some time in our lives, and some probably do every day, But so really what professional traders are doing now is, with the new information that's coming in from AI that is getting better and better and better at predicting what's going to happen the next day, the next hour, the next minute even. It's getting better and better and better. So having those tools is really the same as insider trading. It really is, because they're all helping you predict the future. That's what they're doing. They're getting every week that goes by, there's another way to tell, another better way. So, the idea that indicator driven trades don't work, which is a message that's been out for not so much now, but like last year, the year before, and all that. Oh, the indicators, they all, contradict each other. They don't really tell you anything. You can't go by that. That's really gone now, because now with the algorithms being so strong, those are all the alerts of these different indicators going off, telling you what direction to go. The AI is so smart and the algorithms are so fast that they're basically predicting. They're taking the randomness out, right? So what is random? What does random really mean, right? So random, mathematically, there really isn't a random. I mean, you could call it that, but there really isn't a random. It's just the fact that we, as a species, can't figure it out. So we call it random, right? Well, guess what? AI can figure it out. So they're taking the random as they get smarter and smarter and smarter. They're taking the random out of everything. And of course, that means trading too. So it's being able to predict the market. And I haven't seen an AI model yet that's all in one, like, hey, let me trade your money. I'll just give me your money and I'll trade for you. AI. I mean, there's all these commercials that say they're out there. So I haven't seen those yet, and I'd be a little skeptical about that. But what I have seen is a lot of indicators that are amazingly accurate. And to me, that's insider trading. You tell me if you think that's insider trading. When you have that kind of advantage at a prop firm or a company that can afford all these indicators and spend, hundreds of thousands of dollars of paying people to create them, you tell me, isn't that a huge advantage over the rest of us? Isn't that really like insider trading because they know something we don't know? I think that's if you look up the definition of insider trading, I think it's right there. So it's just something to keep in mind that, and they are getting, as more and more come out, they're getting easier and easier for just everybody to get a hold of. And I think the platforms are starting to introduce more and more of them. So there are ways for you. Still, the biggest thing you have to control once you get these indicators, is yourself. You have to control yourself. And that's one of the things where I recommend that you read Trading in the Zone by Mark Douglas, because we are the biggest enemy to becoming successful traders, guys. We have to control ourselves. It's an interesting thing. AI relies on historical data for everything. That's how AI learns. Read about it. You don't have to take my word for it. You can everything you hear about ChatGPT and some of the other formats for artificial intelligence, they will tell you that they look at prior data to come up with the answers to your questions. And it's the same thing on the stock market. All the AI different indicators, all the algorithms that are designed, the only thing they have to go by is something that happened before, right? So you have to understand that learning patterns, understanding what has already happened before, is one of the main keys that professional traders use to figure out when a price action is going to go up or when a price action is going to go down, meaning a stock go up or go down. They're going to look at historical data. Now, there's all kinds of ways to mark that historical data on your charts, or to use logbooks and write it down before you trade to make a day trading plan with those specific levels written down. Obviously, a chart is easier to mark the levels by using the different tools on your chart. But remember that one key thing. with trading and trying to make a living trading, you're looking at prior data to try to predict what's going to happen next. So understanding and accepting that technical analysis is all based on something that happened prior is the first thing you should learn. All technical analysis is based on something that's already happened, and they're looking at it different ways, and they're deciding how to read that prior price action, prior movements in that company's buys and sells on the market, and marking it out and using that data to make trades. Now you can do it on all kinds of time increments. I have open here right in front of you now a 1 minute chart is the main part of the screen. So this is a 1 minute chart right here. And then down here is volume. So once you have your levels, your historical data marked out, if you were to be what you would call a momentum trader, which most scalpers are, so we're going to touch on that for sure. Let's go into a little bit of detail about that. So if you are a momentum trader, the first thing you're going to do is you're going to open up a scanner in the morning, right? Now I have a couple of very good videos about how to set up scanners so you don't have to buy a service, and it tells you how to build it yourself. And it's really not that hard on Thinkorswim to be able to check for the movers every morning and to set the volume for the highest and make sure you can zoom right in on that stock first thing when the market opens. And there's some good books that talk to you about trading the open that you should get, and I will be showing you different books throughout the video. But the first thing you do is you would start with the scanner here, and then let's go back to the chart. And then on the chart, a most important thing, once you're trading, right? Now let's say the open's already happened. This is a pre-market session. This is the open. This is a 30-minute chart here. See how it's marked? Let me just pull that down. 30-minute, 10-day right here. So every one of these dark spots is an open session. Every one of these gray spots is aftermarket and pre-market. That little dotted line separates the two, right? So we're in the middle of an open session right now. In the morning still, I've already traded today. And we're just going to take a look at this. So how traders use in the very beginning with all the tools that are available for free on Thinkorswim or any platform you have is they're going to mark out their historical data, which we're going to talk about, technical analysis data in just a minute. And then once they have that marked out, they're going to use those levels to decide when to go in and go out of trades. But they're also going to use the volume. This is one of the main things that they use early on. So if I was to zoom in on this, you'll see these columns or bars at the bottom are showing you the current volume that's moving on this 1 minute chart right there. So as this starts to go up or down, it's showing you what does it look like, how many people are interested in that direction to adding or subtracting. So a lot of times you're just, you're seeing the gas pedal go down on these volume bars and you're thinking, hey, I want to go along with that move. There's a lot of traders at this particular price that want the stock to go that way. That's just the most basic momentum trading that you want to look at. Where you think that stock's going to end up, which direction. Then you want to see the speed in which traders are trading it, going in and out. That's just the first lesson you should understand if you're going to momentum trade. You need a lot more than that to be successful, but that's a really good start if you just get that down. So momentum trading is mostly done when it's the open hours. Like here on the East Coast of the United States, the New York Stock Exchange, we open up at 9:30 a.m. And I would say, and this is a 1 minute chart, so you can see the time down here in the bottom of the charts. And I would say that by 10 o'clock, most people are done trading the open. And that's when a lot of the bigger strategies start, right around 10 o'clock, ones where you can count on there's a sort of more of a consolidation. But when you're trading those big movers that are working on a news catalyst, right? When you get news that says this just happened, this just got approved, this drug, it might go up for, many hours. So you just ride the wave. That's what you do. So, but that momentum trading is usually at the open or catalyst based anytime throughout the day. So if you are literally setting your phone for alerts, or you're in front of your screen all day, which a lot of traders are, I am not like that. I go away, for many hours at a time, then come back. But a lot of traders just sit there and they do other things and watch movies or whatever and just have their screens up, or they go out and they have alerts on their phones and they go, oh, we got a runner, we got a mover, let's get back and trade, because it's hard to momentum trade on your phone. Some people do it, but mostly you want a nice platform with great indicators, and you want to get in and out based on the volume and the news and the patterns. We'll talk a bit more about patterns, which are very important in momentum trading, but I'm going to dig deeper into that style of trading in a few minutes. First, we're going to go into technical analysis and how that should start for every strategy. Even if you're going to be trading the open, you really want some prior data on that stock that you're trading. As what are the levels, what are the ATR, the average true range that it normally moves without a catalyst, right? An average true range is usually done over a 14-day period, where you take every open and every close of that time period, which would be on a candlestick. And then you count 14 of them, and then they're smoothed out and averaged, and then it gives you a level. And this is an example right down here. This is an ATR level. So you see, this is the price right after it. So if I go over a candlestick here, like right here, and then you look at that ATR, it's $1.05 that this does not move. This stock, is that really right? Hang on a second here. Sorry, this should be on the day here. So let me switch this to the day. Okay, now we're going to get a real, because that was per chart, like I said. So this is $5.28 for the day. This is a day chart now. So you expect that stock to move $5.28 throughout that day to consolidate. And that might be $5 up, and it might be $5 down, or it might be right in the middle, 250 up, 250 down. Depends on the strategy that you're trying to trade, or it might breach those levels, which means you're sort of in a trend. It could be a mini trend just for that day, or it could be a bigger trend. See here, it probably breached the level, and then it just kept trending up day after day after day. So we're going to talk about that right now. We're going to talk about what would you do for this type of fundamental technical analysis. Now, again, let me just touch on fundamental analysis. So that's looking at the overall health of the company that the security's for. Like, what is the overall health of that company? What are their projections? What are their earnings? And you're doing an analysis to see, is it overbought or oversold? What is its true value? Is this a good time to get in or not get in? Where is this stock headed over the next 6 months, year, 2 years, 5 years, depending on what type of trader you are? That's fundamental analysis, okay? Now, most scalpers, it doesn't hurt to know that, because if you're trading one and you get stuck in a position, if you're day trading, you might want to hold it, which I don't recommend. But if you went too long, you went too far, you went past your max loss, and you're thinking, I know this is going to come back tomorrow. Well, how do you know that? Usually you will rely on a range over a longer period of time than just your day trading. So you'll use that ATR over a longer period of time, or you might even fall back on fundamental analysis, knowing what is the value of that stock. Is this stock going to go up over time? Can I afford to hang on to this if I'm not holding if I'm not in a margin situation where I'm getting charged interest and all that? There's a lot of things to consider that I this would have to be a 30-hour video to go into. So I'm just giving you ideas of why you might need to know fundamental analysis, but generally most day traders and scalpers they know nothing about the stock they're trading. Maybe not nothing, but very little about the stock that they're trading. So let me go in now into how you should start your fundamental analysis. Your technical analysis. So most traders, if they're planning on day trading a stock, they are going to go back with technical analysis for quite a long period of time, especially if they like that stock, like it's on their watch list and they trade it on a regular basis, so they're looking for it that day. What's it doing? Like I trade the RV strategy a lot here on this channel, and we are looking for stocks that are just literally moving sideways, consolidating. We're not looking for the news catalyst like we were just talking about for momentum stocks. We are looking for stocks that are going sideways. And the whole reason that that strategy, day trading volume 1, the RV strategy, was created was for the safety of the traders. So you want a slow moving stock that is moving within parameters of an ATR high and an ATR low, range bound. You're looking for a range bound. They're bound in a range. Obviously they can break out. There's no telling. And then that's a trend. So you trade it differently then. But for the most part, the big mega stocks and large caps over 25 billion market cap are going to move pretty lumberingly slow in a high and low, in between a high and low range. And then you know they're trending when they break out. So that kind of helps you. So if you're going to day trade those type of stocks, and even, I would say even mid cap, I mean, it doesn't hurt. There's a bunch of different ways mainly 3 ways. I say a bunch, apparently a bunch is 3 ways to do historical data. Just very simple, fast historical data that every trader does. Now, you can watch all kinds of videos where they have lines, and then they see when he goes up here and to this line, you can see this is where you turn around. And then when it goes down to this line, it goes to turn around. Well, those are very cherry picked. And if they're just showing you that chart and it just, you might want to think about, is that enough information, right? So you need to dig a little deeper. I'll go a little deeper here. And I'm certainly not saying that this is the only source, but this is an idea of, you need to know a little bit more than one person saying, follow this exact thing, draw these lines right here if this happens, because it's never the same twice. So, but you do have a basic guidelines to go by. So let's go into the first one you would want to do, and that's a trend line. So I have mine saved on my chart here, so I've clicked on trend. So actually, let me go back to the pan and make sure, hang on a second, let me get to the pan here. So I've got Apple here over a long period of time. This is 20 years. So probably, okay, so there we are right now with Apple's price action today. And I probably would start a trend maybe right here, and that's pretty far back, okay? So and that's 2018 right here. So let me go ahead and put a trend line now. So basically you're just clicking at the low, right? And now we're going to see how many places it touches. So we're trying to get as many places as it can. So that touches there, and it kind of touches 2 or 3 spots right there, but it's missing the next one, which is up here. So this one, it hits here, and then it hits here, and then it actually catches that there. So I don't know what's about to happen further, but we'll look in a second. So I would say that that's more of an anomaly down here, and I would say that I would respect that level. See how we got that? So that's our first, right, descending support here, right? So decided not to click. So let's see if it got respected. So we're right up to that price action right now. So if we zoom in, it does seem like it respected it. Now we're zoomed in, so the line looks like it's straight. It looked like it almost perfectly respected it and bounced off. So why did that happen? That was a long time ago that we started that line. That was a long time ago, guys. So just think about that. Think about how that's pretty amazing, right? We just lined these up and lined it up where it tapped, and then it basically said, hey, we're going to respect that line a long, long time later, right? So this is on 2022, right? And this is 2025, and it broke it, but then it turned around. So this is a level that is worth looking at and respecting. That is a trend line. Now, you could put trend lines in different spots. Like you could have started right here. maybe not gone back as far, right? So let's just do one here. Well, actually, let me move this so we can see the whole chart here. Oh, it's doing this, making it difficult for me, but let's do this. Okay. And then we'll do the trend line here. So we're going to start here. Now, you don't want to do where the current price is, but we would want to catch that. And look, it hit it there a couple of times and respected this level. Now, if you want to do this the right way, you should zoom in. Now we've created a zone in here that it might ping pong back and forth, like go down, go up, go down, go up, if you were just doing trends, right? Now, the next thing you want to do is an ascending type resistance. So when you trade this stock. So let me go back a little further. Now, there's arguments about how you should mark this. And so let's get back to the levels. We'll do it from right here. Trend line. Let's go ahead and get it right where it's here. And we'll go here. No, that's no good. Here's where everything is, way up here. See it tap all those places? That's one place. That's in the stratosphere. We're not going to, I can tell you right now, that's not going to come into play much, right? It's way the heck up there, right? So then you could do it differently where you could go, well, let's look at the most current data. Why not? It's not that current, but let's say start right here and we go and we try to catch that. So that hits here, here, and then hits that 260 level. Very close. Again, you'd want to zoom in and be exact. We're creating channels here. We're creating highs and lows. And within those highs and lows, you're looking for higher highs and lower lows and things like that. And what I mean by that is, you know, if the stock is going up here and then it came down, that's a lower high, right? And that's the same high, then that's a higher high from here, but lower high from there. And then that's a higher high, so it's really going up. But then you hit a resistance. Well, no, we made the resistance there, so let's be careful. But you're basically lining your trend lines up, and then there's more to think about how you trade it. It's not that simple because this isn't the only thing you mark. You're going to want to mark support and resistance levels, okay, not just trend levels. So let's mark some support and resistance levels. Let's see these peaks and valleys. So look at that, turn around right there. And then it respected it there. And it looks like it respected it there, and it respected it here again, right? So that's an actual level where it got a lot of respect. And then we could go here, look, see how many times that went across there. So that hit here, it turned around there briefly, then it came down and hit here, and it looks like it had a bunch of in here, indecision here too. And then we can go another peak right here and see, does that go anywhere? It does. So it did. It seemed like it respected it a couple times here, hit it again here, hit it again here. Now, is it perfect? No, these are not perfect. You know, there's one there. And you could try to get more. You want to try to get these to line up just like you do the trend lines. Like this one is very close to its low there, where it hit right here, hit right here. Now with the trend lines and the support and resistance levels, now you have more historical data. Now this is on a day chart, 20 years back, but you do have more historical data to look at when you're trading in the moment. Look at these here. That's pretty good there too, right? So you can see how it respected it. Now everybody can put these at a bit of a different place, but you've heard me talk about trading with the crowd. You're not trying to be an outlier. You're trying to see what everybody else does. You know, how does social media affect when these stocks turn around? There's all kinds of things to think about. But if you're trading with the crowd, you don't have to know everything, right? You need to just understand the levels that everybody might see. And then you zoom in on the volume and the other indicators to see, is that level really going to be respected? That's what you're looking for. So when you translate this down to a 1-minute chart into where today's action is right now, if you were scalping on a 1-minute chart, you've only got one level there, you know, because it's so far away. But when the price gets close to it, you're going to want to think about it. You're going to want to think about this level. Look at it, hit it perfectly, turned around. Had trouble there, had trouble here, and then bounced back up. That's a long time ago level, guys. Okay? Why did that work? Historical data works. There is a perfect example. It's not like I knew how that Apple was going to do this or how I was going to mark out Apple. I didn't practice. Do it yourself. Look at historical data. Mark where the price action came up and abruptly turned around, and then tap it to multiple levels as you go across. And then everybody is doing that. Most professional traders are in some way marking this historical data, and you can bet that AI is doing it. So AI is marking it. And now you can, as you get into a 1 minute chart, you can even do it. You could do it like that. You could go like, hey, it turned around there. Oh, look, I'm glad I marked that back here because it turned around here. So each time as it gets tighter, it's generally considered to be less respected because there are less people trading in that time increment. Most people are trading at longer time increments, but that doesn't mean it's not respected at all, right? It's just, that's one of the ways. Now, one of the time increments. Now, the next thing you would do, and I usually do this on a 5 minute chart, and I usually set it for 10 days, but some people do this differently. And I do the Fibonacci levels, and a lot of traders do the Fibonacci levels. So you're going to want to do that just so you have them marked, right? So I tried to get this closer to the edge of the chart there so I can get to 10 days. Oh, it's not showing me 10 days. There we go. Did I set that for 10 days? I thought I did. Yeah, I went back. Oh, maybe I'm not all the way over here yet. Yeah, so it's taking me to the high and the low. That's what it did. So let's go to the Fibonacci level. This is 10 days back. Now, remember when you're marking your Fibonacci levels, which a lot of people call nature's mathematical formula, and you should look up Fibonacci and how it's done, why it is what it is, and how when this opens up, you're going to see all these different levels and how people give more respect to the different levels. A lot of people in the strategies that they're trading are looking at, especially if it's shorter term strategy, and then they've marked a longer term Fibonacci retracement, like on a 5 minute, 15 minute, 30 minute, a day, 1 hour, and it comes across their chart on a 1 minute or a 5 minute. They look at that level with respect, no matter what the percentage on the Fibonacci level says, because it's a level that's in their actual little time frame, and it's important to know that that's why that's different. But let's go ahead and click so you can see what I'm talking about. So you always go left to right. This could be low to high, but it's always left to right, and that way you know you've marked it correctly and you get the high. So this is at 214.56. Let me come down a hair. I might not go exactly if it doesn't click in for me. There it is. I got it. So there's 50. So I left click and then I dragged it, and now I'm looking for the low down here, which is 93.25. There's 20, 25. Now I left click again, and these levels, like I was talking about, these percentages opened up. But when I go back to my 1 minute chart, now if you were trading, say, the RV strategy, that is a channel trading range bound strategy where you set your share size based on the channel size. It's a very, very unique, safe strategy to trade, but as with any strategy, practice in a simulator first before you trade with real money. But as you could see, Fibonacci levels started to create ping pong type channels where it would bang, 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 bang like pong, and then it would break it, then it'd come back and it bang, bang, and then it's, again, it's staying within its channel, bang, bang. Why would it do that? Same reason historical data is working. The crowd sees these levels. Now, there could be a lot of reasons why it's turning around, but one of the main reasons is everybody is reacting to something that they see. So figuring out what it is that most people see is one of your jobs as a trader, so you can have confidence coming in and out of that level. It's that simple. You don't need to get bogged down with a lot of complicated stuff. It's just, and maybe this seems complicated for you, right? Everything has a learning curve, right? You're going to take a little while because I'm covering a lot here, but basically, you want to figure out what other people are doing. Now, you know who can figure out what other people are doing really well and better every single day? You know who that is? That's Mr. AI. Let's meet Mr. AI again. The AI, he, she, whatever, is figuring these things out for you. And that's what the indicators that we'll talk about some of those later, what they're pointing out to you, right? That so that you don't have to mark all the tools every time. Although it doesn't hurt to have them and to understand support and resistance, trend lines, and Fibonacci levels at the very least. And that's why I'm showing these to you. So now let's go back to a 1 minute chart. And we're going to see, just for the heck of it, what did these Fibonacci levels do for us? Now, this is 10 days back. And here's there's only one level that's in there. So a lot of times if you're trading, if you're scalping, right, look at how that level got respected with the fib. Look at that, guys. I do this every day and I still get amazed at how that fib came in right where we needed those two support and resistance levels cut in half there. And it told us what to do here. Look at that, boom, boom. Well, that was from that one, but look at how it just turned it around here. And then, here, it's giving us another area, do before it broke it. Boom, 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 before it broke it, right? If we're just looking at the fib. Now, what the RV strategy calls for, and a lot of other strategies call for, is you do a second Fibonacci level. Now, some people will do it further back than 10 days, and they might use a different chart than a 5-minute chart. So it depends on what strategy you're following, who you're listening to. The best way to do is over time, to learn is over time, figure out what's working for you, because as you learn with strategies, we all trade a little bit differently. So if you're just trying to perfectly follow what somebody else is doing, it's not going to work. Short term it might work. Long term, you will be lost if you don't have that person to follow all the time. So learning how to do it yourself is a good idea. And I just mean these basic ones, right? So you may not want to do it on a 5-minute chart, and you may not want to do it on 10-day and 2-day. I'm about to do a 2-day, as in the numeral 2 days. So let's mark that up and we'll get a look, and that'll end our technical analysis for now, and we'll move on. So now we have a 2-day chart, and it told me right here where the high and the lows are here. It could be pre-market or not. It's also starting at the high, 201.45. I'm looking over to the right to see what I'm priced at here. There's a click. And then we're going down to the same level, which is 193.25. Come on, here it is. Now I'm going to make these a different color so we know what's what. The property Fibonacci tracement 2. So if you watch my videos, I usually do that like a chartreuse type of color. Now let's go back to the 1-minute chart. Now you might want to trade on a 5-minute chart. A lot of people do. And then you look at those levels to see how they're helping you. I don't want to say most scalpers. If you're scalping, I'm thinking you're going to want a 1-minute chart or faster. So how did these help us in here? Not a real lot, actually, on Apple. That's why you'd want more historical data, like you'd try to mark peaks and valleys from the previous day, where the price action turned around. And the RV strategy explains how to do that, where you would mark additional levels, to see if they can help you. See how that's giving you other areas to maybe respect, how it turned around, that went up. And then everything broke this high, though. You'd have to go further back. See if there's so it's nothing. I'd have to go back, but let's finish looking at this 1 minute. So on this 1 minute here, there wasn't really a lot of areas here without this historical data rather than the fib to help us. The channel is pretty darn wide, 199.70 all the way down to 198.32. So that's a big channel. You would want to reduce the size of that if you're trying to trade off levels And that's why I was saying you'd want to mark historical data. 25 cents to 50-cent channels, and sometimes even smaller depending on your share size. So if you get into marking historical data besides on a day chart, and you get into marking it like the RV strategy calls for, where you're looking back on a 10-day chart, maybe on a 5-minute, or they basically say go to a 4-hour. That's how they spell it out. And I don't mean to keep talking about that one strategy, but it is a good way to learn technical analysis, is with the RV strategy. And then you can apply it to other, wow, what is this mess? Let's set this to 5. Say okay, and then let's set the time for like 10 days here. So time frame is, and we'll go to 10 days. Okay. All right. Now there you go. So every one of these candlesticks is 4 hours now. So you might want to start marking where these turned around. Like there's a spot where those, it abruptly turned around from the open and closes, not the wicks. Sometimes you might want to do the wicks. So how you would find that out where to mark these is you'd go by an ATR level, which we didn't get into, and you would mark that as well. So I'm not trying to mark out for one strategy, but basically when you're going to day trade, you're going to scalp, you're going to do that ATR like I said first. Find the range. There's a lot of different ways to do that, okay? The RV strategy has a range. I will show you an indicator that does the range for you based on that before this video is over. But you find a range, and then you're creating channels with inside that range. If you're trading large cap, and even mid cap, it's a good idea to find the range and then create support and resistance levels within that range based on historical data. So guys, that's really the ABCs of the beginning of what you want to do to do technical analysis trading. You basically just let's get it to 1 day. Is you just want to mark it out that way. So we're gonna dig a little deeper here. So if you're just starting, understanding technical analysis is a pretty big deal, and just starting with the basic stuff that I've shown you, it really has gone beyond basic. I mean, really, if you start with what I've shown you, you almost have enough to figure out what are the parameters of the stock you're trading, or at least when it's breaking those parameters, so you need to look for something else. So I would think that's a pretty good way to start. But what are you going to need? I mean, if you've been watching this video from the beginning, it's probably a bit overwhelming, like you don't know anything about this platform that I have. So how I'm set this up and all that stuff. So let me talk to you about some videos that we do have that will make this a lot easier to get started. There's all this video information that's just here for you to learn from. I mean, we're an educational channel showing you video demonstrations of trading as well as how to set up this layout. There's multiple videos about how to build a layout that will be good for trading different types of trading. So you're going to want to watch those videos. One of the other videos you're really going to want to watch are the 10 most important rules about trading, day trading. You're really going to want to watch those, and that's going to go into day trading plans, which you really need. So you're going to want to make sure you watch that video, okay? Then you're going to want to get into seeing how to set up your scanners. And I showed you that earlier. If you want to trade the open or trade momentum runners based on a catalyst, you're going to want to know how to set up your scanners. And you're going to want to, you can use the Thinkorswim news service, but you might want to get an outside news service depending on how much you're really looking for those for the runners. And when I say that, I don't mean go pay for another trader's news service that's copying a bigger news service and is on a slighter delay. I mean something like Benzinger or some other news service. But Thinkorswim has a good news service, and that's free, right? So there are videos about how to set up charts, not just the layout, but the charts within the layout, right? And then there are videos on how to speed up your layout, which is pretty important as you add indicators. You want to have all these tricks about how you can go faster and faster. There's individual videos about setting up support and resistance, which I've just shown you now, but there's some that go into more in depth than that. So watching those videos would be good. Let me see, what else have I missed here. I think that was pretty much everything. There's a lot of videos about indicators and how to use them, how to find them if they're special ones, and how they might work for your trading. And then there's a lot of videos on the different strategies we trade here. So, and we're going to focus on one of them in just a second so you know how to set it up a little bit more. It'll kind of go into the other ones and then it'll kind of give you a leg up. But I would watch those videos in their entirety to really learn if the strategy seems interested, if you're interested in that strategy at all. But here we trade the open strategy, and we have like 5 different open strategies based on breakouts that we trade here. And there's a lot of videos in the archives that show those different open strategies. We also trade the escalator strategy, although that doesn't come into play as often as the open or the RV strategy, because there's certain parameters based on a breaking into a trend and then retesting that the escalator strategy. But that when you see it, it's good to know, because you can make a good deal of profit if you trade that strategy correctly. And then, of course, the biggest, most popular strategy around the world that we trade here is the RV strategy, and that is just phenomenal. And I probably have the most archive videos about the RV strategy, just because of how successful and how safe it is for traders to trade. Remember, when I say safe too, you have to follow your day trading plan, which 2 major things in there: maximum loss per trade, maximum loss per day. And you might want to throw in there no more than 3 losing trades in a row and just call it a day, even if you're below your max loss. It's not like you're trying to get to your max loss on a bad day, right? Just stop trading. And we all have them. We all have the bad days. You're just trying to get more good days than bad days. So yeah, those different videos with a lot more too. I mean, just touching the tip of the iceberg. There's over 300 videos on this channel now, and they're all designed to show you different ways to make a living day trading. So I would definitely look in the archive videos and look at the special videos that show you how to do these things. And I'm going to break into now more of the open strategy for you guys. Okay, so we're going to talk about, if you're still here, that means you like the idea of trading the open, the excitement, or like the idea of learning different strategies, which we're going to go into. We're not going to go in depth because there are all kinds of videos about these strategies. So remember, you want to look for more details about the open strategy, more details about the escalator strategy, more details about the RV strategy, and there's even some videos on this channel about freestyle trading, because I do a lot of I just pull up my chair. I don't have a lot of time to set up supports and resistance. I'm just jumping around for a stock, and then I just start trading based on creating support and resistance levels in the moment. Now, as you get better at scalping, and you have the right indicators, this is one of the things too. I was about to finish. I'll finish my sentence. As you get better, it becomes easier to just pull up your chair and start trading. But one of the things that's changed about the freestyle trading, of course, is the AI indicators, like I've been talking about. They literally call the price action in the moment with arrows and all kinds of things. So remember to watch I have several videos about the newer AI indicators that are coming out, and I would definitely watch those, okay? But let's just do a brief thing showing you about the open. So the open strategy is, everybody, when they trade the open, they're looking for breakout levels, right? Let me clear this drawing set, okay? And let me go back to the open here, and let's just see. Let's just see if we let's open up some pre-market level here, and then is it not going to let me do? Oh, there we go. So we'll open up to like about right there. So here's what Apple's open look. Let's go back to 7:30 a.m. There's 7:30 a.m. Okay, and then we'll go ahead and go back a little further, and then we'll go to there, and then we'll drag it over to like the first. Let's go to like right there. So we're about just over 15 minutes into it, right there. So let's pretend the market hasn't moved beyond that. That's where we are, right? Now, or actually, let's pretend that it hasn't opened yet, because this is the open strategy. Then we can see how we did. Now, one of the open strategies, and like I said, the open strategies are based on breakout levels, right? And actually, let's prepare a little bit better, because the first thing you're going to want to do is to get a better volume indicator. Now, this is the one you can get with Thinkorswim, and there's a lot of different styles out there, free and not free, that are better than this. And I have one in particular that I believe is the best indicator that is at all available for scalping, in my opinion. So let's go ahead and put that in. And that is down here. This is that with the EMA, so the scalping indicator, MMC scalping indicator with the EMA crossover with VWAP. So let me see if this is the right one. With VWAP. That might just be with VWAP. Let's make sure we've got the crossover. There's so many here, guys. It's probably this one. Yeah, let's apply that. And it's coming down here. Now I'm going to get rid of this other one, and the way you do that. And there's lots of videos that show how to do all this stuff, right? Just check that off, apply. And now we have this special, and the ATR is used on the day chart, so I don't use that on my 1 minute, so we're setting up for scalping, so we'll get rid of that real quick too, apply. Now we have a nice, clean chart. Now let's go back to the 7:30-ish time frame here and go to just past the open 9:45, 6-ish range here. I'll go right to there. Okay, so here's where we were a minute ago. Now, open strategies are based on breakout. And what that means is you're waiting for the price action to break a certain level based on historical data of some sort. So you've come up with a level somehow. There's a lot of different ways to do it. I've been showing you some of the basic ways that most people follow. But if you're trading at the open and you're looking for a breakout, here's another trick that people do. They look at like the close of the first 5-minute candle or the close of the first 10 or 15-minute candle, depending on who you're listening to. And when it breaks that level, if you're only going long, then you go in right then and you wait for that to go in. And then there's other breakout levels that mark the pre-market. Now, if you get day trading volume 4, they basically have 5 different, four in the main book, then a companion book has another one. And a lot of people like that book. I recommend. That's a good book. You're going to see me recommend different books in here, but that is one of the better books because it pretty much lays out in detail how to mark the different time increments for breakouts, like 5 different time increments, right? So one of the first ones is the 7:30 a.m. This is, again, East Coast Stock Exchange in the United States. So here it's the 7:30 a.m. or 2 hours before market open. You want to mark, you want to start to find the high and low between 7:30 and 9 o'clock, 9:15. So here's our 9:15. So we go back all the way to see, is there anything? This is before 7:30, so that big price action doesn't work. So here's our 9:15 right here, this level, and it looks like there's a whole bunch, and you can't mark after that. It looks like there's a whole bunch of hits. So it looks like this is probably the highest. So we would mark that as a breakout level, right? You just, we'll call it breakout. And we'll say high. And then we're going to extend it, and we're going to make it look a little different. Since it's high, we'll make it green, and we'll make it double thick. Now, again, I'm not going to show you everything, but this is just your basic. And now this is after 7:30 a.m. This is the lowest level, right? Again, this is before. This is 7:27. So this is the lowest level. So we're going to mark that. And I didn't save it, so we're going to do that all over again. And breakout low on, and then we'll make that red, and we'll make that bigger. I don't know if I tripled it or not, what I did. Okay. Oops, I didn't do the dashed line. Okay, so now we have a breakout level that we would be looking at. Now, there's different rules for breakout levels strategies that you use. Most of them, the basic ones are you're just waiting for a breakout, and then that's when you can start to trade. And then you trade short below the breakout down here. A lot of them don't, they say don't trade in between the high and low levels, like this is a no trade zone, but they don't all say that. They just say start trading when you break out. So immediately you would have started to trade. A lot of them say don't start trading until after the first 1 minute candle. So you probably would have jumped in right here because it is still going up. And then you take your trade and you would have made some big money. And then if it broke again here, it did there too. So you would have had to be careful there, but it broke again here. There's a lot of money. Now, how do you know when to get out? You either set a price range based on your share size to get out, or you have support and resistance levels here that tell you when to get out. And that most breakout strategies will have the levels that you should look for. In this particular one, you would go to a 5-minute chart, and you would, I'm not going to go in, like I said, in depth into every one because this would be a really long video, but I'm just showing you the basic ideas, right? So go into a 5-minute chart. Now we go back a few days, right? Now you're going to be marking these levels, right? I call them profit pivot levels, or I'm not going to be exact here, but you would do something like that, and you would then you would use these levels. We saw that the price action's above, so I'm just going to kind of mark the ones that are above. You can go overboard here, so you want to be a little careful. But how you decide that a little bit too is how much do you want to try to profit before you get out? What's your risk level, right? So these are here. See, I'm marking them above the breakout here. That's what I did. I went back based on historical data where the price action stopped and turned around. Usually you should start the further ones back. I didn't do it. I started up here. But this is just to give us an idea of what happened. Now let's go back to the 1-minute chart and see what that did for us. So if you entered here, you had multiple levels where it told you that it's, this is probably a good spot to get out here, here, here. And then if you waited, you might have got caught on this downfall because we don't have one right here. So, but in here you would have profited. So you had $199.65, and then that's gone up almost 30 cents. And then you've got up to 35 cents, and then you've got up 45, 50 cents, and then depending on if you went here. So if you had 100 shares, say if you had 500 shares, you're making a couple, $200, $300 on your very first trade, depending on which level you got out at. Now, you could scalp in here. Most breakout strategies don't want you to do that. One of the best things I like about the Day Trading Volume 4 is it says do not take these trades. It has to be above the breakout level, and it has to be breaking a level. So if this opened right here, you technically could have taken that trade right there. But the rest of these are no trades until right there. And this is a very risk-oriented type strategy to save for you, like low risk oriented. So that's basically how it says to trade. If you go here, you can see you could have, broke through, you take the first trade, you could have got out right at that level, you could have gone in again right there, you could have got right at that level, and you made money. Then you waited, Okay, so you're already above that, so you don't take the trade till you break the next. You count these levels as breakout levels. Once you start, they can become breakout levels. And then look at this. Now you go boom, 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 boom. You can, take profit in there anywhere and re-enter a trade as it breaks it, or you could just hold it because you have a cushion. So at the end of this trading, you probably had, if you went all the way, well, this is all the way to 10 o'clock, but you probably would have stopped more like in here, and you would have made, $400 or $500. And they say that the open strategies, if you get them right, are like printing money. So that's just one idea of an open strategy. So let's get it now. Let's keep these pivot levels here, and we'll do another one, and just remove the. I should have just moved the level of these breakout levels. Hang on. Let's go to a 30-minute chart and show you another breakout level. Okay, this was on 30 minutes originally. Time frame, 30-minute. Okay. Now the way that the 30-minute is, it's the pre-market level of a 30-minute, and you're going back to where it closed at the high and low from 9 o'clock, the half hour before, the half hour ending out before. So this one. No, I think it would be this one, right? The 30-minute. Sorry, guys. I'm just trying to understand here for just let me. Yeah, so where this one closed at 9, right? Before the other one opened. So you would mark these levels. And it seems like this would be your high right in this area. And this would be your, no, it's the open and close. It's not the bodies. So it's only the 30-minute level high and low. Or I think, I'm sorry. I haven't traded this one in a while. I think you just mark the 30-minute candle. It's that simple. So you would just take this up here. So this is like at 198.59. So let's just change that price level to 198.59. All right, so that's the low, and then we'll mark the high here. And let's see on. Now this isn't exact. You'd want to look up and get the exact. Okay, that seems right. I didn't jag at that one again. You can, this is all your personal preference, guys, but I'm just trying to get you something here. So there's our 30-minute breakout level marked. Now you would look at that at open session again. As you can see, it's about the same thing, right? You go in here, it's exactly the same, except here it isn't quite the same, because you could have gone on a short one here as it broke through here. And as it broke through here, and I didn't mark any. There probably are levels to get out here to take your profit on the profit pivot levels. And this isn't quite as big a move until you get up here. Now, some people will trade this to 10 o'clock, and then you have a huge move here. But it looks like about the same amount of money with maybe a little bit more difficulty to read down here. But again, that's the 30-minute. And then the other way you do it is you go to, there's obviously, I'm covering like 4 different strategies here, and there's a 5th one too, the Holy Grail, which would be more difficult to break into here. But I'll show you one more. So now a lot of people think you need to wait for the open session to really trade this correctly. And my advice would be trade in a simulator and see how the different ones are working for you over time. But the main thing that they all agree on is wait for a breakout. See what's going on. So this is your first 5 minute. So this level would have been a breakout level, and then this level would have been a breakout level. So all these would have gone away because they're in between the breakout of the first 5 minute. You're all the way down to I'm trying to clean it up a little bit, but so here's your, let's get rid of that one too. So here's your zone you can't trade in. So we'll go back to the 1 minute and we'll just look at the highs and lows of those light blue lines. So here they are right here. So the 5 minute breakout, it's not as profitable because you can't even take your first trade till right there. And there's not a clear exit. So this wouldn't have worked out as well. Now you would have traded this much later. So this would have worked out great here. This one. The thing is that we're looking at the same stock for different breakout levels. So it's going to be roughly about the same. I tend to trade the 30-minute most often, even though I said I can't remember because I haven't been trading the open as much lately, but I tend to do the 30-minute and I tend to trade pretty high because you can usually get your share size filled at the open because there's so much volume. And you're looking at one of these better indicators, of course, is going to help you with reading the volume. Like this indicator here, the scalping indicator with the crossover is now, it's not lit up because we're not crossed over because it's reading all the way to wherever we are in the daytime now. So right now we're trading it. This is like 1:55 p.m. East Coast time, Eastern Standard Time. But the red signifies the sellers, the green are the buyer, the blue column is the volume. You can see the momentum inside here, what it is. So it's really slow right now, but I mean, you can see typically what it's going to be. And so that's why you want to, when you're trading the open strategy, you definitely want to look at this volume. See, by the time you got to a breakout, if this was the 5 minute, you'd be in here on the 1 minute in here. But, this is the 1 minute. Okay. Yeah. So by the time you got into here, see how far your volume dropped? So you'd want to keep an eye on this because it's dropping. It's losing on this one. It went down. On this one, it went down. Finally, you're here and it's telling you, hey, this is where you would have known that even though you didn't hit the level, don't wait. Most likely you wouldn't want to wait because look how far it dropped. Like there's not enough buyers pushing it upward. So it's telling you with that candlestick pattern. And this is another thing to remember, guys. The candlestick pattern playbook is probably the best pattern book, but you need to buy some pattern book, maybe more than one. I like the candlestick pattern playbook because it rates them and it's done by a whole bunch of traders, and it gives a rating. So I like that best. But I've shown you historical data where the price action might stop abruptly and turn around. And historical data can be 1 minute ago or 5 years ago, right? You decide where you want to mark it. If you're doing very tight scalping at the open, you probably don't want data that's too far back. Doesn't hurt to have the big lines, the big levels, but you're going to need to know most recent areas where it turned around because you're only going to have a few minutes, and the other levels probably won't ever come into play. So you're looking for levels that are going to come into play, and then you're looking for volume, and then you're looking for patterns within patterns. So besides historical data, here is a pattern, a hangman, a dragonfly, or a rickshaw man, whatever you want to call it. Probably hangman's the best, or doji. This is telling you a very possible price turnaround here, that it's going to go the other direction, and it did do it. You can see that it's lost faith up here. You compare that with the volume, it's going, guys, it's turning around. So if you were not waiting for it to break a level, you could ride this down, and just watch the patterns as it happened and watch the volume as it happens. You learn more and more and more in a simulator about how well the patterns work. And then when you combine all kinds of indicators, are going to tell you with a big arrow will come up and go down right here, because AI reads this stuff for you, and they're going to say, go down. Everything says go down now. Don't worry about studying. Go down. And that's why it's any trader, pretty much, not any trader, I got to be careful, but traders are getting a real leg up now with the right indicators and being able. So you just got to keep your share size low, trade in a simulator, make sure if it you count on the trades going against you, and just take it slow and easy, and then count on historical data, strategies, and indicators, and practice in a sim, and you're gonna be amazed at the results you're gonna get. You're the biggest enemy. You're battling yourself by following your day trading plan. So I would be remiss if I didn't talk about a very, very popular strategy out there today, which is the RV strategy, if I didn't cover at least some of that in this video, since we are talking about strategy and AI tools that make it seem almost like you're cheating the market because it's getting easier and easier to trade. It's still, I don't want to give the wrong message. You need to practice in a simulator. You need to have a maximum loss per trade and per day. And it's not, it may be easier for some than more than others just because they have to get over wrestling with themselves to follow the rules, because we're not really trained to follow the rules, right, guys? So we need to train to follow. We can't change the parameters of the rules. We have to follow the rules that you make so that it's real money. When you start trading with real money, you've got to be very careful. But basically, the RV strategy is a range-bound strategy, and I have tons and tons of videos about them on this channel because it's one of the favorite things that we like to trade here because we do well with it. And so I would watch those to have a detailed setup. What I went ahead and did is I marked it up very quickly for you so we can just get right into it. So let's talk about what it really is. So the RV strategy is the range-bound strategy. You first find the range, and how you do that is you go to a day chart. So let's switch this to day. It's on 1 minute right now, so let's get down to a day. And we'll zoom in. Oops, how many days do we have that set for? So it's just 1 day. I don't know why it's doing that. 24 hours. Hang on, this is just weird the way this looks, so let's just go down here. Okay, there we go. Just weird. I thought 24 hours would do it. So here is a day chart. So every one of these candlesticks represents a day. And as you can see, I put these Fibonacci levels in here and support and resistance levels in here based on some of the stuff I've already shown you. You do not have trend lines here. Some people do it for the range-bound strategies. I don't typically do it. And I do have a custom indicator up here right now that makes it easier to figure things out. That is pretty easy to get. So I have links to these things. But this is the high and low of your RV, of your ATR. Well, we don't have ATR in here. Let's put that in. So let's just do a regular ATR. Apply. So there it is down there. So now we can look at the close of yesterday and look at the ATR. It's down there when I go over the close, and it shows $7.69. So you take that number, you divide it in two, and then you add half to the close to get a level that's a high level, and you add the other half to the close to get the low level. Now this does it for you, and it does it on every stock. So you don't have to, if you're switching around, if you just have this indicator, it's going to instantly do all those calcs. But that is the way you do it if you want to do it. And of course, there's a book that explains how to do all this. But the first thing you want to do is to find your range. So we still have Apple up here. So we're finding our range. The next thing you'd want to do is you go into a 5 minute and you set those Fibonacci levels. I have it on 1 hour right now, but I went to a 5 minute like I showed you earlier, and the levels are exactly where they were before. So the pink and the yellow lines, a 5 minute 10-day and a 5 minute 2-day, gave us support and resistance levels within the ATR levels, which you probably didn't see before, right? Now this isn't the open strategy, this is different. Then the next thing that this strategy calls for is you first go to a 4-hour chart and you look for historical data where the price action has stopped and turned around, and then you mark it. It's so clear. Stopped and turned around. Stopped and turned around. So that's what you're looking for. Now this is on a 1 hour chart, because the next thing it said is, well, if there aren't enough of those on a 4-hour chart, because there'll be much less candles, go to a 1 hour chart. If there's not enough there, then you go to a 15 minute. If there's not enough there, finally you go all the way down to a 5-hour chart. I mean a 5 minute chart. Let's get back to the intraday daily, 1 minute, 1 day. Okay. So now we have your ATR levels and you have your historical data based on 1 hour. Big mess, right? You don't need this ATR down here anymore, so let's get rid of that. Now, normally what you would do is you would have multiple charts set up either here or on another screen, so you don't have to keep changing the chart time increments. I'm just trying to keep it simple without a huge setup for you to take your trades, because here's where you would take your trades on this active trader here. And you can see how much you're making or losing. And then this is the ladder where you can set your trades in here too. Now I have videos about how to do all this. This is not one of those videos. So, and you can change all these buttons and change all this stuff. So let's just go back to the strategy itself. So the strategy says that you want to trade you start trading a half hour after market opens. And so there are many, many hundreds, if not thousands of strategies that start exactly a half hour after the market opens, whether it be a breakout or based on something like the RV strategy here. Most all of them will have you set a range. And those ranges are calculated in different ways, but I believe a large portion of them take the total Wilder's range, who's well known as mathematical formula, and they divide it in two to find the middle, the medium range. Although some people strategies are the entire range up, you make a level, and the entire range down, you make a level. Then you pretty much know if it went all one way, where should you expect it to stop its normal range. Usually if it's going all one range like that, it's probably trending, and it's not going to be an RV strategy stock, because the RV strategy is a consolidating mega large cap, and you don't want it to break its range because you can't predict it anymore. Then you would break into an escalator strategy. And briefly, the escalator strategy is if it were to break down, excuse me, if it were to break down through its range, then you look for it to pivot back, like say it broke down here. You look for it to pivot back, and when it hits, that's when you jump in. Then you're taking the move. It's like it's retested, it's gone. And that's the escalator strategy. And that's a very, very powerful strategy. Now, the RV strategy is between a half hour after market opens. So let's go ahead and zoom in. That's 9:57. And you roughly only trade it for a half hour. So there's our little window, that rectangle. So I'm going to expand that. Excuse me again, guys. So although you see a lot of lines here, when you're zooming in on a 1 minute chart, it's very easy because you won't see this action over here. Let's just kind of follow this along, how you would see this as you trade it, So here's 10 o'clock, right? So these levels were marked on the 1 hour, and you saw me mark those. So what am I looking at when I start to trade this? Well, the levels are considered ceilings and floors, and along with the Fibonacci levels, and they're to be highly respected until they're not, until they break them. As you could see here at 10 o'clock, it came up, retested, bam, respected that level. Bam, respected that level. Didn't quite make it. Expect maybe, since it didn't make it to the top, it's not going to respect that level. Then bam, for the most part, respected the Fibonacci level. Going up, didn't make it. Now you're on a bigger move down as it breaks it, and it keeps going down. Then bam, it respects this level here again. So they're not going to be, but just look how accurate, guys. Look how accurate those levels are being respected. Not every time. And of course, you can never 100% count on. I'm sorry, I have something in my... So, I've been talking all day because I was quarterbacking before this. So you're using these levels to go in and out. You're using these channels to set your share size, right? So that's a 25-cent channel. And if you got in this trade as it bumped up, you're looking to make 25 cents, and you get out and it stopped dead. That's a perfect size for you to have risk management, right? And it's basically a risk management oriented strategy. So it creates channels, it trades in between those channels, and you're just going short when it goes down, long when it goes up. It's not enough though. Channels are enough. It's not enough, but it's a great beginning for a strategy. You want to back it up with volume down here. As you get to those levels, using your scalping indicator or your regular volume indicator to see, like, is it losing its way up here? You know, is it seem like the column is shorter? See how the column's shorter as it hit that level there, going back up? It kind of told you, like, you don't have as much volume to push it up. It was at the top though, which is good news. So you think about it, you probably break with it, you know, and then you get into it here, but then as soon as it dropped below, you see it's not going to make it. So you get back, you write it down. Now in that book, it specifically talks about how to trade, like how to do that. So you don't have to just get my data, but there's so many different videos that talk about, and you see it being, you know, live demonstration videos of it being traded, being accurate time after time after time. You can never count on any strategy 100%, guys. Look at this, the Pong action here, you know, in and out, in and out, in and out, in and out. You know, you're totally counting on the levels, no other indicators here. Now, again, when you add AI indicators and advanced indicators, or just any indicators for that matter, to this strategy, your RSI, your buy-sell oscillator, you know, your momentum indicators, each one makes it easier and easier. But it all started with the strategy all by itself, that if you knew anything about scalping, it just made it so much easier to make money, that a group of traders got together and developed something that was for a large cap. So you have to have, you know, enough money to trade. But if you've made the PDT rule, then you should have no problem trading, you know, 50, 100, 500 shares of most of these stocks. And then you're making, you know, the possibility of making some pretty good coin, and the possibility of making a living. Now, you can use the strategy on mid-cap. You know, I don't think it works as well, because mid-cap moves much slower. You're looking for a pretty big ATR. Like, I just got rid of it, but you're looking for an ATR range that can really move the stock up and down. Excuse me, guys, for continuing. But I just wanted to make sure that I covered this strategy, because the open strategies are a lot of fun, and they say it's like printing money. I kind of feel like this strategy is like printing money too, once you practice and learn how to use it. Again, trade in a sim, anything. Look at how that channel is still respected as we go past. Now we're past the normally when you would trade it, and it's still, if you get into that, you can use these levels to trade the power hour too. Look at these. My God, they're so accurate. Apple, it pretty much told you, you know, what to do here. So I don't know, what time is it now? We're not going to have enough. It's still 2:25 here on the East Coast. So guys, that's basically an overall a mini tutorial on how to trade, how to do support and resistance, how to use indicators, or how to identify and find them, what good books there are to read, how to set up your chart videos, how to set up support and resistance videos, and on and on and on. This is a treasure trove of amazing information if you stuck around to the end. So I appreciate you watching it. Don't forget to subscribe, and we'll see you the next time. Stay green out there. Hey everyone, this is the Professor for Day Trading for Success. I get asked a lot for videos I have already made, so I wanted to go over how YouTube channel works, how our YouTube channels work, so you can find the videos I've already made. The opening screen should look something like this, and then you should have one video that's sort of promoting the whole channel when you go to YouTube channels. This is going to be videos based on your viewing history that they might recommend. These are the shorts. I steal my shorts from the $1 Million Margin Club because I love playing the John Bull Bear game. And then these are going to be the videos in the order, and then my only affiliate link. And then up here you can click right on the videos, and you can have your choice of going the latest, the most popular, or the oldest, and you can scan down, and they'll all be there by order of that order. And then there's the shorts I talked about, and the latest thing we have on here is a playlist. But another way to find videos is, like, if you type in the episode EP 287. If I type that in right there, that's going to take me to one of the most popular videos right there. So, but let's go ahead and take a look at this. So that's how else you can find things. But go to the playlist. You can see just the teams just made one, the 15 most shocking videos. But basically videos you're going to want to watch. So if you go down to these are all the playlists. I have a lot of them every season, and then other specific ones. Go view full playlist. This will have them all. Like the Bohemian student said, they really didn't catch on to trading until they started to watch all the video archives. I think these 15 are really the most important recent videos that I think you should watch. So hopefully, guys, that's helpful. Always stay inquisitive and go green out there. I'll talk to you soon.